अपना course. Get smart. Get ahead.
Let's talk about the features of the GST. Means what are the basic features of the GST envisaged in CAB or the procedure? And the same state transactions. See what is envisaged because of the federal structure of different structure of Indian economy. We have because of federal and unitary state nature and say the center and state has different financial powers, and that is envisaged in this. We have a dual GST comprising central GST and state GST to operate concurrently on supply of goods and service for considerations. Means to say earlier they were all independently they used to levy on a different facet of a transaction. So the central government used to levy at the removal of goods on the service rendered, and the state used to levy on this when the goods have been sold. Now they both will operate on the same concurrently and same supply of goods and service for consideration. For example, to give an example, once again a motor vehicle manufacture of value of 5 lakhs, if the goods are manufactured worth of 5 lakhs and they have been supplied. So there are two rate of taxes, two rates will be levied. One is CGST at 10% if we say, and SGST 10%. So means to say on 5 lakhs the 10% is levied by the central government, and another 10% is levied by the state government on the same 5 lakhs. Whereas in earlier situation, the same transaction we used to levy 16% of central excise, and the 14.5% was to be levied even on the 16% of central excise. So that kind of cascading is not there in this GST. Now on the same value base, both these taxes are levied. And taxable event is of supply. Earlier it was removal or sale or receipt of services or rendering of services. Now all that will get replaced by a term called supply. Means any goods which have been removed or given to or supplied or received, it's called as a supply other than sale or whatever they are going to coin and define the term. We call any supply of goods and services. Any supply of goods and services, taxable event is that. It's not on removal, nor on sale, nor on entry, so on and so forth. All these taxable events which we saw in earlier slides will get replaced as to say, and a supply of goods and services, the taxable event will be there. Within the same state transactions also. In interstate transaction, within the same state means within the state of one state or within the state of Karnataka, both same transactions, supply transactions, goods and services, both CGST and SGST, both central GST and state GST to be levied. And for interstate transactions to be covered under integrated GST, there is another model wherein earlier we have a CS, a central sales tax. Now that has been taken care of. So instead of central sales tax, it is nothing but it is get replaced by interstate transactions to be covered under integrated GST model. See, once again, there's nothing to worry about it here. It component in this, there are two components like once again CGST and IGST, which I'll explain later how the credit mechanism is available. Earlier, there was no credit mechanism in a current scenario. In a future, in a proposed GST, even in whatever the taxes it's paid on the interstate supplies, that is creditable. Even it's envisaged, even there is a supply means even a stock transfer or a consignment sale to the value what is been envisaged, and that IGST has to be collected. That is what has been thought process. But the Rajya Sabha committee, which gave a report on 22/7/2015, has made a little distinction in certain 1% additional tax, which I will take it later. And IGST would be the aggregate of CGST and SGST. It has component of central goods and service taxes and state goods and service taxes. Because as you say, as a game changer, the GST is not origin based taxes. The GST, I'm not getting into very basics of GST because I think you would have learnt in some other sessions and some other PowerPoint presentation. I'll not go to the basics of GST. The GST basically is a consumption. It's a destination based. So IGST would be aggregate of CGST and SGST. It has both the components of CGST, central levy and also state levy. And let us not get into how it is apportioned. Apportionment happen at the back end. Only as a dealer he has to collect first what is the rate of IGST has been designated. So he is going to collect the taxes and he is going to remit that particular taxes, and IT framework at the back end makes the reconciliation and redistribution and adjustment to CGST and SGST. Next slides I will explain that how it will happen. So all interstate transactions to be covered in integrated GST model. Whereas same state transactions you have dual GST, means the same state, within the state of Karnataka, within the state of Haryana, any supply of goods and services happens. It has two components, central GST levy and also state GST levy. And IGST is levied by the center. The central government, the central enactment will levy the IGST on all interstate transactions. And the apportionment and distribution as per the constitutional provisions it will happen, or finance commissioner will decide all those issues. And another one features of GSTs, the proposed to 1% additional tax on interstate supplies, which is not creditable. It's because of many of the manufacturing states, they had a fear that they're going to lose a lot of money, and the revenue loss will be there because of this proposed new feature of rate of taxes and the GST and all that. And when they had an apprehension, it was proposed at least 1% additional tax on interstate supplies levied on all interstate transactions from, means to say, if I buy from Maharashtra, or if I from Gujarat, which is a manufacturing state, or the manufacture goods, and or else if the Tamil Nadu dealer buys from Karnataka state, which is a manufactured goods, he has to pay in addition to IGST. If the IGST is fixed at 20% per se, he has to pay plus 20% plus 1%, whereas 20% is creditable, whereas 1% is not creditable. So it adds little extra tax on this particular goods, but this is what envisages for at least 2 to 3 years. When the GST council takes care of and they deliberate on the further process, then it may get removed. But till then, the proposal is 1% tax on interstate supplies. But meanwhile, the Rajya Sabha committee recently on 22nd/7/2015, they have proposed let the 1% additional tax there be on interstate supplies whenever they receive consideration. Means to say, if you understand earlier concept of sale, so means to say, when there is a sale, there is a consideration. When there is a, at such conditions only let the 1% additional tax to be levied, not for inter-depot transfers, consignment sales, or stock transfers among the states, among the units of the same company. So means only for interstate supplies with consideration, let the 1% additional tax be there. That is the committee report they have suggested. And for supplies where there is no consideration, like stock transfer or consignment, there will not be 1% additional tax. I know, as you are all, will it not take the spirit of GST? To a certain extent, to a certain time it will happen. Let us see how the GST council is going to take care of in the near future. And further, exports should be zero rated. Even now, on the exports, the state center, the states are not levying taxes. And tomorrow, also in the GST, exports to boost the export and make international business more competitive, exports should be zero rated. And whatever the taxes paid, purchased goods which are to be exported, that unclaimed input tax or the claimable input tax will be refunded to the exporter, subject to the procedures and law, whatever is envisaged. So to make it more competitive, exports should be zero rated. That will be levied. And further features. Biggest these input tax credits. See, already I understood in there is input tax credit mechanism in rental excise, in service tax, even VAT. The next is biggest game changer in case of input tax credit. Even whatever the IGST, means integrated GST, whatever it is been paid on the interstate transactions, interstate supply, even that credit mechanism is available. Whereas input CGST and SGST recover against output CGST, SGST respectively. Means to say, if you pay CGST, when you collect CGST, that mechanism is available against to each other. When you pay SGST, when you collect SGST, once again the same credit mechanism is available. Whereas cross mechanism is not available. Means CGST cannot be set off to SGST, or SGST cannot be set off to CGST. So they flow independently. I say, as a dealer, as a people who are seeing this, any businessman, consumer, do not worry about how it happens. It happens at the back end. Only we have to understand. So this is the tax to be paid, and this is the tax to be collected. So once, and this has to be uploaded. If we understand that much, the backend process, I think the GST will take care of that reconciliation mechanism. And cross utilization of CGST is credit not permitted except under AGST. Means to say, CGST has to be taken care of taken in CGST, SGST has to taken set off against SGST only, not interchange. But CGST, SGST can be taken against the available IGST. I will explain in the next slide how IGST flow can happen and how they can set off. Please understand this much. CGST against CGST, SGST is against. So not interchange between CGST and SGST. Whereas IGST can be set off for IGST, CGST and SGST. That I will show you in the next slide. And our input IGST recovered by against output IGST, CGST in that order. That's what I said. So IGST, whatever it is paid, can be set off against whatever the IGST collected, and any unclaimed CGST or unclaimed SGST in that order. If you just remember earlier Indian Civil Service, ICS, acronym you can remember. I means IGST you can remember, C for CGST, S for SGST. In that order, ICS. So IGST set off against IGST first, next available CGST, available SGST. In that order, the credit mechanism is available. And refund of unutilized accumulated is allowed to exporters. See, basically to make more international business more competitive, any unutilized accumulated it is allowed to exporters. The refund has to be given as the procedure as the law envisages in GST. Let us look at some other features of the GST. Like, see, we looked at the sale dispatches like supply. Non-sale dispatches means to say like consignment transfers, and stock transfers means inter-depot transfers. Consignment sales means on the basis of consignment, the agent is to sell from the principal the goods received, or on the consignment on the sale party basis. So these transactions were never taxed all these days, all these years. Now in a GST regime, even the stock transfers, consignment sales, and the inter-depot transfers, we are putting under the supply transactions, and on such non-sale dispatches also IGST is collected, integrated goods and service taxes. But as per Rajya Sabha committee report, recently a select committee report has given, but 1% additional tax will not be there on this kind of non-sale dispatches. That's what the recommendation. Whereas IGST is collected as 20 or 25%, whatever the rate the import committee or the consensus prevail, that will be collected, and that is vatable. That means creditable. Means whatever the ITC is paid on even such track transfers or consignment sales as IGST, ITC, that will be given a credit in the set of, as I said, IGST is IGST, and IGST is CGST, IGST, SGST. So that will be given as per that. And these are not levied VAT. Now in GST it will be levied, that IGST. And like to be treated on par with interstate sale in GST with ITC to the transferee. So any receiving state or any receiving person, if he has paid the taxes IGST and such transaction on sale dispatches, and ITC credit mechanisms available. Only prerequisites for all these ITC credit mechanism is the dealer should understand uploading of electronic data, that is stock transfer details, or interstate sale details, or consignment sale details. Once he uploads the whatever the taxes collected on those invoices, and it will be matched ITC electronically, and the credit mechanism will flow. And in a nutshell, to put it in a very very brevity, input tax like CGST can be set off against CGST output tax only. SGST can be set off against CGST. CGST is not to SGST, SGST not to CGST. That one should remember, as any people who are looking at it. And understand, please, CGST is for CGST only, SGST for SGST only. Whereas, whatever the integrated GST, the integrated goods and service tax, whatever it is levied and collected and paid by the buyer in other state, he can take a set off against IGST first in that order. Any available still amount is there, he can set off against CGST, and he can set off an SGST on all the three tax in that order. As I said earlier, please remember it is ICS, Indian Civil Service like. So I stand for IGST, C for CGST, S. Just for simplicity to understand, so cross credit mechanism available, not available between CGST and SGST, SGST, CGST, whereas the mechanism for IGST is available in ICS manner. First IGST, CGST and SGST. I hope I am clear. I'll repeat once again. CGST to against CGST, SGST against SGST, not interchangeable. Whereas for IGST, you can claim against IGST, CGST, and the SGST in that order. Okay, ICS.
Apna course. Get smart. Get ahead.